Good evening and welcome to tonight's member webinar where we look at ASX investment opportunities in review for the 7th of October. The information covered this evening is general advice only. As a reminder, if you'd like to know more about our products, please visit investorsignals.com, and if there's anything from tonight's research and analysis that you'd like to discuss with me, give me a call on 1300 614 002. Tomorrow in the office. Starting with a graph of the US indices, let's have a look. So the big news in the market was the stronger employment data on Friday in the US, and that caused the US equities to rally off the lows, and it's had a big impact on bonds. So using the 10-year bond yields as a reference, we've seen it go from 3.8 almost back up to 4%. Which suggests that the market's reducing the chances of another aggressive interest rate cut in the US this side of Christmas time. The impact on the equity markets is rallied off the session lows, finished on the highs. So even though we've got a red arrow and the price action was below the moving average, of shifted from overhead resistance to support at the moment, and really you'd have to stay on the long side of growth equities with a stop loss below Friday night session low, or even a little bit further back into the midweek sort of Wednesday lows in the US if you're trading the indices. So that's the way I'm looking at the indice positions at the moment. The S&P 500, similar situation there. Looked like it was rolling over under red arrow below the moving average. Strong employment data closed on the session highs on Friday. So again, we've got the tight support level there and would not sort of flip back to a short or bearish position on the index until we saw those support levels taken out. XJO today back above the moving average, under red arrow. So again on Friday it looked like we're starting to roll over. Strong employment data and bullish for our market, along with other Asian markets, and partly sort of off the back of optimism around Chinese stimulus as well. Let's have a look at what's gone on the advisory blog. The focus has been, I'll start with a couple of the US stocks that I've just posted, and then have a look at what's gone on for the Aussie market as well. So up on screen there at the moment is Okta, which is a US cybersecurity or personal identification technology company. We see value in this down here at around $72, and we've added that into our US Class B managed fund. Micron Technology, bullish on that, continuing to deliver strong revenue growth. Zscaler in the cyber security, we've been buying that after it shifted from sell conditions there into algorithm buy. The FANG, so yes, this is an expensive area of the market, but if you're wanting to kind of participate in what may be an extended rally off the back of the employment data on Friday, one of the ideas would be to have a look at this with a stop loss at $25 there. Domestically, Pepper Money, just highlighting the higher low formation. Stop loss goes at 128. The Global Tech ETF, so this is an ASX listed tech ETF, support there at around that $95. The pivot low there is at $92.60. Again, that's just an idea to get exposure into sort of an ongoing flow of money into growth investments or growth assets at the moment. Another option around that idea would be the cloud computing ETF. So this is the Beta Shares Cloud Computing. Support there at around that sort of $11.25, $11 mark. Stop loss would go at $10.88 on that one. Beach Energy, so as you would know from the previous week's webinar and the recent blog posts, been bullish on the rebound in oil. Beach Energy has been one of the ways to get exposure to that. So is Santos. Santos has rallied now from about $6.94 up towards $7.30. So we're just sort of moving back through the blog post there a little bit further. The actual crude oil ETF, which triple O, support there at around that 520. That's rallied. Transurban's an interesting one. Look, generally Transurban's going to do better if the market is pricing in further interest rate cuts. So the stronger employment data on Friday night in the US and pushing the yield up on the US bonds probably isn't the catalyst to cause Transurban to rally, but it appears that we're ultimately heading into a lower interest rate environment. It's just at what pace are the reductions. Transurban, therefore, I think you can be fairly confident to think about this for your investor portfolios. Traders will just want to keep an eye on the price action and maybe wait for a break above that moving average. And there we are, back to last week's webinar. So with tonight, again, what I'd like to do is run through my watch list. I think it picks up a combination of ideas that have gone on the blog as well as some new opportunities to have a think about. So mineral resources, we've been bullish on the rebound there across BHP, Rio, mineral resources. We've started to close out most of those positions. We still have some China exposure and some BHP exposure. This CNU still makes up a big part of our portfolio, and it's had a tremendous rally off that $5 support level there, getting up towards sort of where I'd say is probably fairly full value, basically 50% recovery of the trend that had been in place for almost 3 to 4 years, which had been the sell-off, and then we're seeing money pour back into China tech, property, financial services. So Tabcorp is an interesting one. So it closed on near the session highs today. You could probably put in another support level here when you're thinking about a trade here, and I'll just drag this into position. So maybe just reverse that around. So something like that's what you're going to be mindful of there with Tabcorp. A stop loss could be as tight as 45. 45.5 cents essentially, or you could obviously bring it down into sort of the next higher low formation there. But fundamentally, it looks like lows in place for Tabcorp and should see slightly better price performance from there. This is the cloud, so the Beta Shares Cloud Computing ETF. So again, mindful that it's under red arrow, but given sort of the support there and the way we're viewing the US indices for the moment, this is a way of getting exposure to that, and your stop loss would be there at 11.35. Select Harvest, not doing it there, but just highlighting its under buy conditions. Fortescue's been part of sort of this bullish iron ore trade. Again, your tight stop loss there at 19.20, or it could be sitting back there at 17.20. iPay, longer term, we quite like the allocation here, but probably not a major catalyst for that right at the moment. ASX bullish close today, so that, we hold that in the portfolio. The FANG, as I spoke about earlier, so a little breakout trade there. Stop loss goes below that 25.05. The global tech ETF, so your stop loss could sit as tight as that 95.24 level there. Megaport, just highlighting there, that's starting to maybe move off its lows back up above the moving average, closed on the session highs. The global copper ETF, been fairly bullish on this, but again, we've mostly taken profit in that in our trading accounts, still hold it in our longer term investor managed fund. Flight Centre, not doing too much there at the moment. Semiconductors, we hold a small amount of that still in our managed fund. Pro Medicus, fairly expensive up there. Pepper Money added to that today. Gold Road Resources added to that today. Tyro not doing there. The Vanguard Global Value Equity Active ETF on the watch list, haven't done anything there. The Cure ETF, we've been buyers of this on the dip down here at $48. Future Tech Innovators, interesting one to keep an eye on, but haven't added that to our portfolio. Not doing anything with Whitehaven. ATEC, so this is real bullish. So if we look at the history of this, switching and sell conditions into algorithm buy, originally at 18, then support at 22, now pushing up to 27. Brickworks, bullish on this. We hold that in the property portfolio, which, as I've been highlighting in the prior weeks, is now up 20% over the last 10, 11, 12 months. So Brickworks is one of our overweight positions in that portfolio. International Value, again, just sort of keep that one on your watch list. Looks to be building support there at around $25. Global Robotics and Artificial Intelligence. Probably just maybe just one of the things to think about when you look at this index or this ETF. is it's not significantly higher than the pre-COVID peak that we've had. So interesting. You need to sort of dig through the holdings, the top 10 holdings, and that might be something I'll take a closer look at over the next day or two and update you on the blog. Small company master ETF, so small companies continue to do well. So today was a bullish day. Ingham's, this one just to have a think about. So just to zoom in a little bit closer, we haven't really got the break above the moving average yet, but you might sort of have this one on your watch list. We've started buying it in investor portfolios, just accumulating it. Will never be a significant sized position in our portfolio, but we've added a small amount of it in. From a trading standpoint, you could think about a stop loss there below 286, or even at the pivot low there, which would be 283. The health ETF, so we've started buying this now. The correction from sort of $12 back down to around 11, that brings it back into our target valuation, and we've started accumulating that. Beach Energy, so if you're holding this, just stick with it and just continue to sort of ride it higher above the moving average there. The food ETF, bullish on this. We see value here, higher low formation. Stop loss goes there at around 637, 635. Expecting the positive momentum to continue there. Not doing Brambles, we've taken profit there. Collins Food on the radar, probably reasonable value down here at around that 870 level. The Triple O Oil ETF, so bullish on this, and part of the whole energy trade there with Santos, Woodside, Triple O ETF, Beach. Downer EDI, really sort of consolidating after the better earnings result. Viva, not doing anything there, but highlighting that it is breaking out off that 275 pivot low. Macquarie Technology Group, so switch from sell conditions there into algorithm buy, and support there at around that $73. That's moving higher. The physical silver ETF doing well. Reliance Worldwide, we hold that in the property fund after switching from sell conditions into a series of algorithm buys. Coles, so this is a new addition, so switch from sell there into algorithm buy. Hard to sort of say that there's deep value there at a yield of around 3.5%. I think Coles is likely to consolidate. Certainly what you can think about doing is selling covered calls over it, in which case you start driving about 10% cash flow on an annualised basis plus the franking credits. Transurban, switch from sell conditions there into algorithm buy. If we have a closer look at it, the price action's still below the moving average, but I'd be surprised if we're not sort of getting down to a point where there's an inflection and a rally in Transurban, and as a consequence we've added that into our portfolios. PEXA, under Red Arrow, this little dip here I think will produce another buying opportunity, maybe somewhere. If we did see it sub $14, I would see that as a good entry point into PEXA again. Northern Star, preference Gold Roads at the moment, where we're allocating additional money to gold. That's the stock Gold Roads. Still like Northern Star, but currently Gold Roads offers a bit more value. Bunnings Warehouse, we hold that in the property fund. AZJ, and then I'll finish there on the China, so that just puts into context the 20% plus rally that the China indices have had. The CNU far greater than that, but again, probably getting back to sort of 50% of this trend that had been in place for 3 years or so. So I suspect sort of 50% bounce off the lows. Normally you start to get some level of resistance there. Just jumping through the investor portfolios, just to have a quick look at these. So in the ASX top 20, Transurban, Coles, CSL, just in the last few weeks. If we go into the top 50, just see the same thing, obviously. Transurban, Coles, CSL, all Medibank private there as well, just all within the last few weeks. And in the top 100, so still the same group, so we're sort of not getting sort of too much expansion out of sort of those sort of concentrated large caps. If we go out to the 200, start picking up a couple of new names here. Genesis Minerals has been added. Transurban, Coles, CSL, IPH, Medibank, and there's Gold Roads. So they're kind of all the positions within the last 30 days, and you can maybe toggle through those and take a closer look at those charts. Just doing the same for the US, just having a look here. There's Honeywell International. We've added that into our US Class B managed fund. Honeywell's actually a really interesting mix of, sort of older style industrial, defence technology, and the correction down here to sort of $200 thereabouts looks to be a pretty good entry point for that for longer term investors. If we go into sort of a little bit more of the growth in the Nasdaq, have a look at a couple of names that have been added there. Also into the S&P 100. So again, you see Honeywell there, which is part of the S&P 100. Nvidia, which is up 11% since being added. General Dynamics, Danaher, Raytheon, which you may recall is a stock they've been bullish on. That's originally rallied from $70 up to $124, but since sort of having its most recent algorithm buy signal there, the switch from sell into algorithm buy, it's rallied about 24% from there. So yeah, if you haven't already, make sure you keep an eye on the model portfolios, and as a reminder, turn the envelope on so that'll become green for any of the models that you want to get separate email notifications for. And then finish this evening, let's have a look at the ASX 200 trade table. The performance is now back up at the highs, up 50%. And if we have a look at the open positions, just today we've had CBA added. Last week we had Computershare, Medibank, CSL, Webjet. Then we get into positions that have been in the trading portfolio for a few weeks. Life 360 is obviously one of the better performers, along with Whitehaven Coal, Insignia Financial, Yancoal Australia, and all the stop losses there are in place. So thank you very much for listening in this evening. I look forward to speaking again next week.